looking at the agenda today and what's gone on. So much great information as people are thirsty for information and knowledge right now. I'm Vince Molinari. God bless you, Scott. Sorry, did I embarrass you? Scott and I are old friends, so I can get away with that. Vince Molinari. I am the founder and CEO of Molinari Media. We run a number of different specialty channels, the Digital Asset Report being one that focuses on blockchain, digital assets, crypto initiatives globally, as well as The Impact, which is our specialized show that focuses on ESG, climate change, the advancement of the Sustainable Development Goals of the United Nations. And I am thrilled to be the moderator today, but I think this is going to be much more free-flowing given the scope and the expertise of our panelists, many who I know for years and who are great friends. So I have to read this because it's such a mouthful of a panel title, Sydney, thank you. The technology-driven financial institution that provides open banking, fintech solutions for blockchain and digital asset investors. That almost sounds like a speech. So I want to introduce briefly and really have our panelists kind of do a 1 minute, 2 minute introduction on themselves and their companies, because they're all so diverse and innovative and add so much to this conversation that I wouldn't do it justice. But first, if I just run down a brief introduction to everybody, and then we'll kind of go around individually to go through the background. First, and deservedly so, Joy Schoffler, who is a global brand strategist to business, governments, and high-profile people, who also a dear friend, and had a wonderful exit a couple of years ago of Leverage PR, of a PR agency that Joy had started. Full disclosure, I was one of her clients who she did an amazing job for. So welcome, Joy.
Thank you.
You're welcome. Scott Purcell, another dear friend and fellow road traveler to Washington, D.C., and huge advocate during the Jobs Act. Scott is really so knowledgeable when it comes to everything from trading clearance, settlement, depository, working with Congress and legislators. He is currently the CEO, and I love this one, the Chief Trust Officer of Prime Trust. That is a tech-driven trust company that it is providing custody and trust services for traditional and alternative assets, amongst other things. Scott, and you look so cool. You got the T-shirt going. You're rocking it. You know, here I am still trying to make it with a tie and jacket. Good to see you, Scott.
Good to see you. Yeah, we had an all-hands company video conference earlier this morning, so that's why I was rocking the shirt. Works well now too, though. But you look good with the tie. I like the tie.
Thanks. We've got Zeev Kienan, another dear friend who is a blockchain and digital expert who is joining us from Tel Aviv at the moment. Zeev is another friend and been through all kinds of wonderful challenges, conversations as the blockchain crypto market has been iterating, super aligned with impact investing, the Sustainable Development Goals. Zeev also happens to be, because he's a slight underachiever, an attorney who focuses on corporate work, securities law, as well as, of course, blockchain. He is, I believe, the COO of Onera as well, and the chief legal officer, or legal lead at Good Dollar. So, Zeev, welcome, and thank you for joining in our decentralized format all the way over to Tel Aviv.
Thank you, and you see, you're not the only one with the jacket today.
Yeah, and we have our matching pins for the SDG.
Yeah,
so
we have
the
SDG is always with us.
Yeah,
the force is with us.
And certainly, last but not least, Ami Ben David. Ami is a founder and CEO of Onera, and really just a great history. And I've got to know Ami over the years, and he's been a great pioneer in the space, going back to Spice VC, Securitize, and really has been one of the early thinkers of how do you combine this technology innovation and efficiencies around blockchain digital. So Ami, welcome, and thank you for joining as well.
Thank you. I'm from London today, so we're covering all continents almost.
I love it. You know, Sydney, in his great orchestration, wanted to make this a globalized panel. So thank you, Sid. Well, if we can go around the horn for a moment, minute or two, Joy, tell us what's going on, what you're doing these days, and let's set the foundation with everybody for our conversation.
Yeah, thank you so much. Can you hear me okay?
Beautifully.
Perfect. So I ran Leveraged PR, and we represented a couple dozen different crowdfunding and digital platforms, hedge funds, payments, banking, blockchain, you name it. We represented in the fintech space until I sold. And then upon selling Leverage, I went and helped run a commercial real estate REIT, kind of focused on multifamily, senior living, student housing. Really, one of the things I saw in the market were that asset values were just really high. And if there was any sort of uncertainty, things were not going to continue on. And so I decided to take a step back and went back to consulting while I actually waited for the market to hit the downturn that was inevitable here because markets are cycles. And very excited to be kind of jumping back in and looking for the right investments and things of that nature these days. So I think it's an exciting time to be in the market.
Wonderful. Thanks, Joy. Scott, tell us a little bit about Prime Trust and what you have going on.
We really focus on helping people launch their technology-driven businesses. I think, as you know, Vince, we're very, very proactive in the crowdfunding space. Many of the crowdfunding portals, broker-dealers, Reg A platforms, real estate syndicators, and others are our customers. They use us for escrow and payment processing, compliance, and a variety of different things. And we also provide those same set of technology-driven or technology-enabled financial services for a large part of the crypto industry, where our customers are exchanges like Binance and OKCoin and Bittrex and many others, as well as the top OTC desks like QCP and Haymeyer and Alameda, and OWS, and so many others. So we're very active in really anyone that wants to build a technology-driven service focusing on customers or institutions. We provide them with the mechanics and the rails to build those companies. And we're having a lot of fun, even in this downturn.
Great. Thanks, Scott. Steve, if I can jump to you, please.
So I can tell about myself that, I've been in the digital security space for a while. And what happened with that market is that it had a lot of potential to bring more transparency and efficiency to an old securities market, but it was missing some essential elements. Recently, when I met Ami and we discussed Onera, it was a few months ago, I understood that Onera has got a lot of interesting solutions to the problems faced with that market, and it's got really the potential to bring that innovation to the financial industry. And so what I'm going to do now is let Ami present Onera.
Great.
Ami, the ball is yours.
Hi.
As my co-moderator, Ziv, has done the handoff, please jump in.
Yes. So yeah, I'm the founder and CEO of Onera. We are focused on bringing digital securities to the institutional market. Security tokens started as a continuation almost of the ICOs that came before them, and initially it was targeting more retail on top of crypto networks, and we found that actually there's a mismatch with the assets. The assets were targeting institutional and accredited investors, while the institutions were not really ready for them. and they were not ready for institutions. So we built a network which is designed for institutions. It's a network where all the nodes on the network, it's a blockchain network where all the nodes are regulated financial institutions like banks, asset managers, and exchanges. And they bring, on the one hand, they bring the assets onto the network so they can vouch for them and they can verify that indeed these are quality assets. And on the other hand, they bring their clients to invest. So it's in effect both a network, a technology network, blockchain network, but at the same time, it's also a distribution network for digital securities. So that's what we're working on. And recently, the latest news was that we actually released a platform that connects to our network through our API, which is a full issuance platform that we give basically free to our launch partners, which on which you can launch assets, and basically any user of the bank can just log in through their bank account and make 3-second kind of full settlement investments.
Wonderful.
So that's where we are now.
I guess if I could frame this question, perhaps for everybody, if we look at this evolution, this goes to, at least for me, the evolution of finance. Lots of work that we did in the early days with the Crowdfunding Professional Association and CIFRA, the advocates, and democratizing access to capital, the job creation, and really looking to create a more and more of an open ecosystem for companies, projects to access capital, for investors to access new and differentiating ideas, wealth creation, blockchain, digital assets, really being perhaps the next generation or the accelerant of that. What is our hurdle? What do we have to get right here to get broader acceptance and to move this? I think, as you're referring to a bit earlier, Ami, the institutional opportunity through the channels to accredited and even retail. And maybe if I can pick on Scott first on that. What do you think is our biggest barriers? What do we have to do, Scott, to get this going?
That's a big question.
Well, a big question for a big guy of stature.
Yeah. Well, I think there's several parts. First is the regulatory framework, which the upcoming changes from the SEC are really going to help, especially with Reg CF and Reg A. It'll work towards that democratization. The other has been happening, and that's the succession of really good deals that you've seen coming out of Start Engine and Issuance and Republic and some of the other platforms, where they're very popular offerings. So they're striking the imagination of people. They're causing people to want to get involved, or like Fund That Flip and other MHP and American Homeowners Preservation, who we're all friends with, and some of the others are doing with real estate, and getting people involved in those regulations and the new regulations. So once you have better adoption across both retail and institutional markets for these, for really online capital formation, then that makes it much easier to go towards the next step of ATSs and secondary trading, which we're highly involved in. I think Prime Trust is the only custodian that the SEC has given a nod to for this. So it's really exciting what's happening. The new regulatory framework is going to be great, and what the primary industry participants are doing are really going to kick this into another gear as we go forward. It's exciting, and it's happening.
Great. Scott, if I can drill in on that for a second, because look, I think when we sit and think of Chair Clayton's harmonization of private securities laws, the proposed amendments to Reg A Plus and CF, and what that could do, I think what Prime Trust has done, quite differentiating, and you're very modest in alluding to it, but really this custody challenge, right? Where, lived it, breathed it, when we don't have a custody requirement for an unregistered security, right, yet the regulators have continually asked for custody. And it's, again, these are not DTC eligible, they're not DWAC, they're not a public security, so that custody framework didn't exist. talk to us a little bit, because I think I think it is so instrumental, and I applaud you tremendously for what Prime Trust has done around custody. Could you talk a bit about that solution, how you got it done, and frankly, why the SEC has given you the green light to go ahead with it?
Well, it's a complicated problem. I come at it. Remember, I come out of out of the securities industry. I've owned 2 clearing brokers, so I understand what it means to clear and settle public securities. You can't do it with private securities. I also understand what it means for clearing firms and why they can't really custody. They cannot effectively custody private securities because the regulations on them for pricing, for net capital computations, for customer reserve requirement calculations, there's a whole set of rules that make it extremely impractical for clearing firms to custody private securities. So it's very high friction. So really only a trust company is able to do it, or alternatively, if it's turned into a digital asset, if people want to self-custody on their ledger device or something like that, they would be able to do it. That can lend to some issues with KYC, AML, settling transactions, trusted counterparties for fiat versus digital and things like that. So the custodian's role in this is very similar to that in the public markets, where Schwab or Merrill Lynch or E-Trade or Robinhood are all trusted custodians for people. They hold their securities there. They let them settle the transactions that are executed on NASDAQ or the New York Stock Exchange or OTC markets or something like that. So to replicate that plumbing in private securities is, is tricky. And so that's something that we've been working on. And, like the guys at Securitize and T0 and others who are very active in trying to solve these problems, they're doing it from one side of it, and we're doing it further underneath. We're doing it as part of the plumbing, not part of the front side.
Great. Well, I think it's natural for me to jump over to Ami, given the infrastructure play at Onera. What's your thoughts, Ami?
Oh, well, I'm less familiar or less working today on the retail side of things and the smaller companies. I'm working on the larger kind of deals and the larger projects that are private. And in effect, what we're seeing, take for example a simple transaction where you're trying to automate the issuance of maybe a B round for a tech company, right? When you do that, then the way that they did it for many years was just have a cap table, which was on an Excel sheet. And nobody was talking about custodies because people were actually registered on the cap table in their name or their entities or a trustee on their behalf, but there's a cap table and it's on an Excel sheet. So a lot of the problems that that people saw in this market came because we were trying to launch the first security tokens on top of crypto networks that were not really designed to do digital securities. So because of that, you have to find all sorts of solutions to who is holding the security, what happens if the wallet address gets lost, what happens if somebody has your address and move it to another place, how can you make sure that the asset is sent to an address that is held by somebody that actually has KYC and AML. So I've actually found myself in the first couple of years of working in this space solving a lot of problems that were only there because we were using the wrong infrastructure. I think everything became a lot easier when we decided to say, okay, what if we actually built a blockchain for digital securities? And you make sure that all the nodes are regulated financial institutions, all their clients, all of them have gone through KYC and AML and accreditation through their banks. So you can be in a very simple situation where a user can just log in with their bank's username and password and just go in and click invest in an asset, and then 3 seconds later it's settled and they are the owner registered on the cap table. And the only thing that's happened is that if before this cap table was done on an Excel sheet, this cap table is now held on a blockchain, which is just much better. So a lot of these kind of problems of how do you treat private securities as public securities where there's no legal and regulatory infrastructure for that almost disappear when you have a platform that is basically designed to do just that.
So when you talk about the institutional community that you're focused on, Ami, what has to be done to get the next level of acceptance to engage around digital assets of size and scope that is attractive to an institutional buyer?
So what I can tell you is that I've been talking in the last year, basically, with almost all of the major kind of institutional banks, investment banks, the big exchanges in multiple countries in the world. And what I can tell you from all these meetings is that they all look at digital securities as the future. It's not anymore a situation where we have to sell this future to them as it was 2 years ago when nobody knew what any of us, on this call was talking about. Now they're actually preaching to me. They know that it's happening. However, they are very slow. They take their time. And what they're looking for is basically the right way to do it, the optimal way of doing it. And they have to go through their legal departments and their compliance department. There has to be a champion internally that's actually pushing it really, really hard. For them to go into business model has to work. When all of this fall into place, then they can take it and they can immediately offer a number of investors that are already their clients. So there's a huge prize at the end of this, but the process to get there, what I can tell you is we had massive momentum going into the Corona crisis. We probably would have been live by now if it wasn't for that, and we had to kind of delay a little bit. But I'm sensing that it's coming back right now. And it's coming back with people understanding actually that it's more urgent than it was before. So for me, it's just a matter of a very slow industry moving at the pace that it's used to towards a goal that they know is there.
Terrific. Joy, if I may, tell me what you think we need. How do we get to the next step?
Yeah, so there's quite a few companies that I've worked with who are selling into institutions and banks, and really what they've done in this is they've gone through, a lot of banks have sandboxes, they have venture arms that they've created to bring in more of this technology. As Ami was saying, they're very actively looking for the right technology. They see it as a huge differentiator and really their only way to survive. So with a lot of these bigger companies right now, I think they, especially prior to COVID, they were really looking at the strategic investments. Some clients I was consulting to, for example, who had a banking technology for commercial lending that's primarily has been more paper-based or Excel-based in a lot of banks. They were looking at kind of bringing a lot of those manual processes in. So they are looking at, how do we use automation? How do we automate workflows? And I think now, especially with COVID, they are looking to increase that investment in these processes that they can gather more data. They can have a clearer picture of what's going on in real time. They can automate a lot of the processes and workflows to just make things faster. And we're seeing that too in the real estate industry specifically. So actually was a client of Scott's over at the REIT that I was at, and they're a phenomenal company if anybody's looking for infrastructure there. But they're one example of a tech platform within the investment firm that's really automating a lot of these processes that used to be manual. So in the last, 4 or 5 years, I think we're seeing pretty rapid adoption, and it's very normal. It's no longer, will we have a fintech solution? It's what's the fintech solution? How are we going to make those investments? The thing that I think is going to be interesting to see, I think there's a lot of companies out there right now that are just kind of in treading water mode, especially the smaller banks that are, have mortgage origination or have any sort of financial problems, debt. A lot of them are over leveraged. And so right now they're trying to just make sure that they're going to be okay past this particular downturn. I think there's a huge question mark on some. Larger institutions obviously tend to do better and have, more access to capital and liquidity there. But it's, anybody who's selling into those particular institutions, I just take a really good look at, like, are they, one, do they have a sandbox or a VC arm that you can go through? Because that's a really good way to kind of get in with those institutions. And then two, are they going to be affected by this for the next 3 to 6 months? Because, obviously nobody wants to waste their energies and efforts selling into something where, they're just not, they're treading water. So just really being aware of kind of what's happening with your target audience right now, I think is important.
That's great, Joy. If you put your PR hat on for me for a second,
Yeah.
Is this, do we need more education awareness? Do we need, an industry-wide effort? What do we need to let people know, I guess, the water's safe, right? This is a different day and maturity level, I think, of blockchain and digital assets than it was just a couple of years ago.
I think we need a vaccine, honestly. I mean, and until that happens, just look at real estate, for example. The amount of people who are utilizing mortgage forbearance. I had a friend, we own quite a few properties, and I had a friend call me and they're like, oh, we just did a moratorium on all of our mortgages. Are you guys doing that? I'm like, no way. I want to use my credit to buy more in this coming industry. But the thing is that there's a lot of people who are, even though they have the financial ability to pay, they're pausing mortgages. And it's, a lot of times it's the servicers that get stuck with that paper, right? Like it might be backed by Fannie and Freddie, but they're servicing it, and Fannie and Freddie could take potentially a year to actually clear that with the servicer. So you're seeing huge discrepancy in rates right now. Things are all over the place, even though rates are the lowest they've been. What people are actually getting charged for their mortgage, if they can get one, is a lot higher there right now. It's going up and down. There's crazy swings. People aren't sure. Brick and mortar places are not sure. Retail, for example, is not sure if they're even going to be there in some cases. People are saying they don't need offices anymore, right? So that's just the real estate industry. But that is going to, I think, have some pretty serious effects within the economy. So I think right now, people are just trying to see, like, okay, what are the effects going to be? How am I going to thrive in spite of it? And where can I go next? There are some industries where things are kind of business as usual, but there's very few of those. And so I'd say if you are a fintech and kind of trying to convince your customers that, hey, here's, whether they be investors or whether they be, larger institutions you're selling into, just continue going through the right channels, right? Go to those, see if they have sandboxes, venture arms, things of that nature, and see, like, okay, what are the things that you're actively still investing in? What are the, what are the ways that I can still actively engage you and continue to build? How can I show you that this is going to save money and save people, save your resources? Like, I think the sales pitch is no longer about, about growth. It's about helping to stop the pain. So if you have a solution that can, maybe it's an upfront cost for them, but you can help them stop the pain and the bleeding. And, it's no longer about vitamins, it's about painkillers at this point in the market, I think. So how is your product a painkiller?
I love the analogies, keeping that theme consistent, Joy. Thank you. Zeev, so come on, tell me, what do you think we need? You've got things going on like Good Dollar, of course, Onera. What do you see from a global perspective, not just a U.S. perspective, that we need to move the entire industry sector forward?
Yes, so I've got a view from more like a DeFi industry, and Onera, which is aimed for the hardcore financial industry. And I really see like the potential, I know it's hard to say, but of this crisis, the potential that been brought for fintech companies. Because what government had to do until now is basically, and rightly so, sacrifice the economy for the wealth and the, the good health of people, and it wasn't an easy choice. But when this crisis is over, then eventually we'll wake up to a new reality, and then we'll have to take care of the economy. And then as financial solution brought by the fintech industry would be tremendously important to reach the SMBs and SMEs who's been hit by this crisis. So eventually, what I believe that will come out of this crisis would be a huge opportunity for the fintech industry, and specifically that I believe that it would help, push for the digital securities market. And along with that, I also see that Alex already has joined us. I believe that we will see some DeFi solutions that that been grown, that can be used to help individuals. With all of that, I think like what we are working on in Onera would be, and the problem, I think the biggest problem of this digital securities market would be the trust issue. And Onera has offered a very interesting solution, basically nominating financial institutions to bring assets to the network. And then you have someone who can verify that the digital security is actually linked to an asset, that can vouch for the relation between the digital security and the asset itself. And this has been like a tremendous issue when it comes to digital security. So that's also why I like the project so much.
That's wonderful. Thank you, Ziv. This is great. And anybody else who's listening in, feel free to message in questions. I'm going to, this one is for you, Scott, if we're going to just break things up here a little bit. Scott, how is custody for digital assets in a permission blockchain different from custody in a public blockchain, both from a regulatory and an operational perspective? See, that's a very intelligent question. You know, that didn't come from me. So thank you for the audience participation.
From a regulatory perspective, it's neither here nor there. How custodians hold assets is a operational question. So the custodian needs to be able to hold the assets from the specific blockchain, whether it's public or permissioned. So for us, when we're sticking to digital securities, if somebody is issuing a security on a private blockchain, we need to be able to hold those assets in custody, in cold storage. We need to be able to, verify them just as if they were in a, same as if they were in a public blockchain. So the custody issue and how we hold it, and then how we settle transactions between counterparties. Or, I see Alex from Celsius is on, how people then borrow against those securities or those digital securities to do other things. All of that has to be baked into our systems, which then becomes the operational side. But it doesn't matter to us whether the blockchain is private or public. We just need to be able to support custody.
Right. So really, the essence, I think, of what you're talking about with custody really becomes demonstrating good control, right? And
right, demonstrating good control to our regulators, our auditors, our internal security processes, and to counterparties.
Right. And Alex, everybody's noticing that you've arrived. Feel free, Sydney, turn on that Alex mic if he wants to jump in and have some fun with us here on this exciting panel too. Well, with that, I don't know if anybody else wanted to comment on that great question relative to custody and private or public chain, but feel free to add to that if anybody would like to. Okay. Listen, so I guess
I'm gonna have Alex join us too. He's got a panel over there. But I had a question, if I may, from everybody here. I mean, this uncertainty about what's going on and the Fed, it's putting a lot of money. Do you think we have enough money? Do you think we're going to ask more money? What's going to happen? I mean, basically, I know we're going to be okay 1 year from now, but digital asset, it's going to, it was happening, but do you think everybody going to get away with the fiat money going to digital asset? How does that, this is what we're working on. What do you say that? Anybody can answer that. That a lot of people have these kind of, asset.
I think we need a whole nother panel on that question, Sid. But I think to frame that up for everybody to answer a little bit further, I think that goes to so much of the core of digital currency, blockchain, central bank, digital currency conversation. What happens here? Is there a digital dollar? Does this accelerate it? If we look at this stimulus package, is that enough money? Are we going to print more? How do we
digital money?
I'm sorry?
Are we going to print some digital money?
Well, that becomes the real transition, right? I think terrific question, Sid. So
I can jump in.
Look, I knew your mic was going to be on at the right time, Alex. Alex, do me a favor. Just introduce yourself to those who may not know you, which are very unlikely, but please.
First, hi to everybody. I see both vendors and customers here. So couldn't be better panel. And thanks for letting me jump in and make a few comments. Alex Mashinsky, the founder of Celsius Network. I lived through 4 recessions. And since I came to the United States just at the right time, just before the '89 recession. So all we're doing is basically reflating this Keynesian bubble by shooting more and more bazookas at the problem, right? But this time we're printing close to $10 trillion. If you take the 6 or 7 that the Fed already committed to and the 2.2 that the fiscal government printing, and the fact that we're probably going to need to do a few more injections. And now the Fed is effectively risking the US dollar as the dominant reserve currency of the planet. That is the biggest issue in my view, right? Is it going to work? Yes, it's going to work. No one's going to stand in the way of the Fed. But what the unintended consequences that are going to come out of this disaster is the fact that all the other countries in the world who use the dollar to dominate all of their trade are going to look at this and say, we just cannot continue trading in dollars. And that's what you're seeing China already doing with Silk Road. Russia is now selling oil in euros and in other currencies. And all of that is the beginning of the end for the American empire, unfortunately, right? I'm not saying that like I'm a proud American, but I just think that we are abusing the strength of the dollar just so we could kick the can or the entire planet this time down the road.
Yeah, well, look, I think we're already seeing that migration away from the dollar as that settlement function globally, right? Which I think is indicative of your point, Alex, that we are certainly jeopardizing our position in the global standing as the historic dollar positioning for fiat and being that settlement feature. But thank you so much, Alex, because I know you're living, breathing all of this with Celsius. Anybody else want to jump in on?
There's also a question.
Yeah, please.
Yeah. Yeah, I think there's also a discussion of where all the money is going to, the government money is going to, because I think one of the biggest kind of sectors is getting hit is the mid-size private companies. Okay, so you talk about the huge companies, they're fine, they're okay, they're even giving bonuses to their employees during the hard period. And I think the governments will have to something to support the small people, the small kind of companies and the actual people that get hurt as well. But you have this whole tier of mid-sized companies, private, are supporting the companies. And I think potentially in the world, hundreds of thousands of these private companies will need financing at about the same time. And when I talk to the banks right now, they are triage mode. They don't have the capacity to deal with fundraising for thousands and thousands of private companies. Most of them are too small for the banks anyway. So they're in triage. They're deciding which company is worth their time to help raise their capital, which company is going to die anyway, and which, so this is terrible. And I think actually this is where digital securities can play a very important role in helping the market go out of this crisis. Because the reason there's no capacity to deal with a private company is that unlike the public market, the private company raise process, the capital raise process of either equity or debt is manual and slow and inefficient and local. It's terrible. It's every company separately is going after manually, basically investor after investor, and there's no way to basically digitally create a marketplace where investors can see the private companies and connect them. And I think this is a challenge for the banking industry. And I think that this is an opportunity for the banking industry to go digital to solve this problem. It's almost like the ventilators problems of the health industry, where there were not enough ventilators. I think the same thing will happen to private companies. There's not going to be enough capital to keep many of them afloat, many of them good companies, and out of that, people will be laid off. So I think digital securities could actually be very important for this, for the market to go out of this crisis. And there's still quite a few months to build this infrastructure. And I'm talking to several banks right now about exactly that. And I think that there's some realization that, their current manual methods of just calling investors and trying to connect them with one company after the other, it's just not scalable. It doesn't work for them anymore.
I can weigh in on that. I think there's some, good news that I see is first the PPP loans from under the CARES Act is getting a lot of traction. And I know, a lot of businesses, pretty much all small businesses are jumping on that. The banks are overwhelmed processing them, but the loans are getting funded. The businesses are getting stuff. That said, that's only 2 months of effectively working capital for salaries, health benefits, and rent. On the other side, and so, once this ends, there's still going to be hard times. But on the other side, interestingly, is, as you know, Prime Trust provides a lot of escrow services for the main participants in this. And I expected escrow to fall off a cliff when this hit, and that nobody would be investing, nobody would be raising capital. And exactly the opposite has happened. It is stunning how many offerings are getting launched under all regs, CF, D, 506C, Reg A. It's amazing how many deals are getting funded. I think investors are sitting at home bored, and so they're just putting money into crowdfunding deals. But the good news for small businesses, besides the PPP, is that the capital markets, the private capital markets, the start engines and republics and those types of issuances, these things are working, and deals are getting launched, deals are getting funded, businesses are getting capital even now.
I think that's a great point, Scott. I know when I was raising capital over the last couple of years, there was a lot of investors sitting on the sideline because valuations were absolutely crazy. And so, now there's a lot of opportunity when there's market cycles, right? So there's, I think, a lot of investors who are sitting here and saying, okay, now is actually the time to get the capital ready to start deploying once we start to see things shake out, or we're seeing lower asset values. The good deals out there too that are not necessarily, that are not getting funded because of the banks or things of that nature. I think those ones will have an opportunity to rise to the top if they can really tell their story in a way that makes sense. So, tell why they're not as big of a risk. It's really an opportunity to be able to share your story with investors and share how, hey, this is, we need working capital to grow because we have these particular opportunities. If you are strong and if you're able to tell your story and get it out there to your investors, I think this is a great opportunity now because there's a lot of capital on the sidelines that has been there for a while.
Great. Well, let me break in here with another incredibly intelligent and somewhat a little bit longer. I'll get the first phase of this question. And this is for you, Ami. So by essentially passing off client onboarding liability, KYC, AML to the banks, doesn't that obligate Onera to banking partnerships? That's a question mark. Why wouldn't the major banks not just develop their own platform within their own sandboxes with their own accelerator programs?
Yes, that's a good question. When we started talking to the banks, all of them wanted to go into digital securities, and they basically had to choose between two options, which from their point of view, both of them were bad. They could either go with a crypto network that wasn't designed for their institutional needs and for the regulation and for them to do to be in control of which clients come in and which assets come in, which is important for the institutional market. So that was one bad choice, and some institutions, but not a lot, actually went to the crypto networks route, but most of them kind of shunned this option. And the other bad option was to go to IBM or one of the other providers and basically build a proprietary network just for themselves. The problem is that when you do that, it's just a database. It's not connected to anybody else. There's no network effect. You don't really get the access to other investors. If you so you basically don't get a network, and if you don't get a network, you don't get any of the advantages of or most of the advantages. These securities are not there. So that's why we wanted to create something that is, on the one hand, a network where every financial organization that is a regulated financial institution can join the network, and nobody can say no to you if you meet the basic demands of being a regulated financial institution. Okay, so it is open in that regard, but all the assets have to go through at least one of those regulated financial institutions. All the clients have to come through at least one of those regulated financial institutions. So it is an environment that is not the most open, but it's also not as closed as the proprietary solutions. So yes, we will need nodes that are banks, exchanges, broker dealers, but on the flip side, the advantage, all of them are allowed to make securities by definition. So you get the distribution by default almost.
Great. Thanks, Ami. I guess we have about 5 or 6 minutes left, and maybe we can do a round robin kind of wrap up. So being true to form to the title of this summit, The Aftermath, a Global Financial Meltdown or Opportunity, keeping that in mind. And we have Joy pointing out kind of valuation decreases. Maybe that's the opportunity. Scott enlightening us, and I'm really glad to hear how much is being funded, whether out of great investment opportunity or quasi boredom, but we'll take the capital in the system, Scott. Yep. And really the infrastructure rails kind of component to accelerate things. So if we look at all that, string it together, what's the opportunity, or is this a meltdown? And if the opportunity, are there best asset classes, things that we should be focusing on? Let's go to Zeev first. What are you thinking, Zeev? Oh, we've got you muted. Sydney. Zeev only says very intelligent things. We have to unmute him.
Sydney's muted too.
Oh, okay. Sydney, you're muted too.
That's his part. I mean,
he's back.
Yes.
I know we're not doing anything. So I mean, something.
Yeah, I'll be short.
So we're not unmuting anybody. Just nobody's pays for the microphone.
This is the kids' bedtime, so I'm muting myself from time to time. I just wanted to say that I see many opportunities, really. One of the opportunities that I see, for example, would be with central banks. I see the role of central banks being fundamentally changed, not only setting the interest rate or doing all kind of program um, um, but actually circumventing the banking industry and providing relief themselves. And that could be done only through fintech technology. And the tools that we have been developing, and you know very well how relatively simple it is to develop an electronic wallet and a digital complementary currencies, and we can use the digital securities innovation to provide loans to people and businesses, and I think like here we will see an opportunity. We will see an opportunity with certain central banks digital currency, which is emerging for sure from China, but you know there would not be alone for a long time. US would launch its own digital currency. Europe will follow. So I think you know this crisis would definitely create some sort of a reset within the economy, but also a great opportunity for the financial industry, you know, that we're part of. And, you know, we've seen emerge, we've seen the vision that's been developed over the years, and now it is materialized.
Well, I'm gonna pause that 1 second, Ziv, because there's a question that came in while you were talking. China is already talking about paying their miners in Africa in Bitcoin. What's to prevent them from shifting to paying in crypto yuan? Any response or thought to that? I guess I don't know if that was directed for you, Ziv, or anybody else that may want to comment on that.
Well, I mean, we deal with a lot of stable coins. You know, one of course is a controlled currency, so that's going to be interesting if people ever want to get any liquidity out of it. So if you're holding a digital form of you know, RMB or something like that, then how do you turn that controlled coin into say USDC or true USD or something like that, which then you can turn into dollars or euros or another currency. There's also problems, of course, in Africa. If they pay them in Bitcoin, how do they spend it locally? How do they go buy milk? How do they pay their rent? How do they pay their mortgages? So if they want to pay people in Bitcoin, they're going to have to lay in a lot of payment infrastructure in Africa to make it so that people can actually spend it.
Scott, well, you got the mic there. Give us your wrap. Not your song, your wrap up. Sorry.
Well, on your opportunities question, to paraphrase famous Israeli entrepreneur Bernard Baruch, in the middle of winter I buy hats, and summer will come. So there's going to be a lot of opportunities now in this downturn, as bad as it is and as bad as it's going to get, for people who have technology, for people who have patience, for people who have capital, to be opportunistic and really build towards the future that inevitably comes. So there will be good times ahead, but we're going to go through some rough spots, potentially extremely rough in the next period of time. But be opportunistic. There will be good things to come.
Great. Thank you, Scott. Joy, please.
Yeah, so I think it comes down to Warren Buffett's famous quote, you know, when others are fearful, be greedy. When people are greedy, be fearful. You kind of like Scott was saying, sitting on, you know, keeping yourself in a position where you're liquid enough to make good decisions, because we are just I think we're just in the early phases of all of the shaking out. I couldn't agree with Alex more with the position that we're putting ourselves in as a country, you know, and so there's going to be, I think, a lot of shift, a lot of change in just the way that we're doing business, financial business as a country here, there's going to be changes from this. So making sure that you're liquid enough to be able to take advantage of them. It's really a great time to reset and kind of look at life, look at business, and make some decisions about how things are going to look going forward for you. So I think there's going to be a lot of opportunity in that.
Thanks. Ami, you want to give us your closing remarks? Oh, we need your mic, Ami.
I think he went to put his kids to bed.
Oh, that was Zeev.
We all.
Oh, there we go.
Okay.
You're back, Ami.
Can you hear me now?
Yes.
Okay. So what I'm seeing now is a period of big change across all sorts of things in life. And what I saw when we went into this was practically 2 months of shock, basically, to the system. Practically many of the people that I was talking to almost daily before on different projects and so on, some of them completely disappeared for a month. So first you see the shock. Now you're seeing the second stage where people are getting used to this new reality, to this new normal, and they're starting to think, okay, what's next? And then I think will come the phase where some people will embrace change and some people will basically stick with their own old ways. So this is a huge opportunity, I think, and I'm working with incumbents. So my comments are really specific to this segment of the market. Big banks, big exchanges, broker dealers, people that are working in very institutional spaces that have not seen change in decades, okay? And I think the technology is here. The external catalyst to change is here as well. And some people are embracing it after coming out of the shell shock of the first 1 or 2 months, coming out of it and saying, okay, let's embrace change. Let's do this. Let's get ready for the new market. Let's get ready for a market where everybody expects everything to be digital. And other people are saying, no, let's just fall back to what we know and just make sure that we're not left behind. And I think that the winners will be those that will embrace change. And that's what I'm seeing right now. I'm seeing some leadership from some leaders. It's just early because, as I said, first month and a half was shell shock. You couldn't get an answer from anybody about anything. But right now, it's coming back, and people are coming with some renewed energy.
Well, and I think to close that out, Sydney, my hope and prayer is that as we look at the go forward, that we are more cognizant of our planet and all of our participants as the oneness of our planet and being kind to one another and advancing the United Nations Sustainable Development Goals and thinking about projects and for-profit businesses that not only deliver a rate of return, but are giving us some level of societal, environmental, and cause-related good. So I think it's really a holistic time for us to take a breath and reset and think really what's important to ourselves and our planet. Yeah. So with that, Sydney, thank you so much. And
I appreciate that, but if we have a lot of people actually watching the videos recording, if anybody want to get in touch with you, Vince, where do they have to go? I know you have your media company. Where do they go? Look at some of your good
I'm always on LinkedIn, Vince at molinarimedia.com. Sydney's my new agent, so reach out to him.
But you have that brand, so you have a lot of great interview before the aftermath, we call it. That's fintech.tv.
Thank you for the plug, Sydney. And just a shout out to so many great people that are participating. Love great stories, great people, companies, projects. Send them over to us. We'd love to get them over to our producers and look at highlighting those.